While the last 2 years were difficult for the cruise industry, Royal Caribbean is as bullish as ever about its future. Joining me now, fresh out of the company's investor calls, Naftali Holtz, Royal Caribbean's Group CFO. Naftali, it's great to talk to you today. You have seen a bit of a turnaround here after really what were the lows during the pandemic, a return to profitability in the most recent quarter. What does the demand look like right now going into what has traditionally been one of the busier months?
Yeah, well, first, great to be here with you. You're right. We are fresh of our Investor Day, and what we shared with the investors today, as well as we shared it with everybody on the call a couple of weeks ago, is that we continue to see very strong demand for travel and cruising as people want to re-engage with the world and travel and spend time with their family and friends on board our ships. So we continue to see very strong demand across the board. We have higher bookings than we had in 2019. We have higher pricing than we had in 2019. And we see just very, very engaged consumer that wants to seek and explore the world on our ships.
So higher pricing, more demand. What does that tell you about where the mindset is of those consumers? We've heard over and over, at least during the summer months, that despite higher prices, customers were still willing to shell out the money because they had not traveled in so long. I mean, how much of that momentum can continue in the face of some of these inflationary pressures?
Yes. So before actually in 2019 and the years coming and leading to it, we've seen a really strong shift in preferences for the consumers where they want to spend their money, they want to spend their time. It's really about experiences, and we're squarely in the experience business. And that's really what propelled our business back then. Now we were obviously not delivering cruises in the last couple of years, and now as we were coming back, we're seeing those preferences back, and just people shifting their their spend and their time, really seeking those experiences, and it's really bodes well for us. Cruising is an extremely attractive value proposition for the consumer. We take them all over to where they want, either just a weekend getaway in the Caribbean to our perfect day exclusive destination, or their bucket list Alaska or Antarctica experience. And we just seen those consumers really engage or really want to spend the time and money, kind of acquiring those experiences.
You have highlighted 3 key financial goals by the end of 2025. Talk to us about this Trifecta program that you have put in place and how far along you are. Are you on track to achieve that goal?
Yeah. So, our business is now on the recovery. We have the full fleet operating. We're almost near kind of our historical occupancy levels, and we can see the momentum. And we're also delivering consistent financial results. And what we felt is that this is the right time to put the coordinates as to where we are going to focus the company and ourselves in the next couple of years, and give that to the company itself as well as to our investors as where we are. And we feel pretty confident that we will get there. It's we don't plan for a perfect operating environment. It may not be a straight line, but as we kind of continue to see with our new ships, with the strength of our platform, with the experiences, the value proposition, we feel pretty good of where we're going.
Finally, Naftali, gas prices, something that everybody in the travel space has had to deal with. Talk to me about how you're thinking about your operations. How have you had to shift things up to navigate those prices? And, to what extent are you thinking about a different mix of energy in the anticipation the prices remain higher for longer?
Yeah. So, what we have seen, obviously, we are, as we kind of think about our fuel expense for the ships, we've made a lot of progress over the last couple of years. As we deliver new ships, we design them. They're usually 30% more efficient on fuel. We've invested in technology to reduce and project that reduce the energy consumption on board our ships. And we have a very active hedging program that mitigates the volatility. And we're roughly 50% hedged for next year. For the fourth quarter, we'll be around 65% hedged below market prices. So we continue to navigate the environment and continue to, optimize the consumption and manage the fuel cost.